What a difference a day makes. The day after the Fed and the banking debacle, we can see right here how we were unable to even hold any kind of semblance of level, really breaking down on a gap down. This is not what we want to see. Now we have a lot of names to go over. Apple came out with earnings. We have to talk about what happened with WAL and what was down 60% today and then bounced. See these breaks right here? This gives us an island right in here. Some could even argue that the island started yesterday or last evening, right? We could argue that that happened right there. Either way, we have an island. This is what you would refer to as a bearish island reversal. Why? You broke out, fails, and then breaks to the downside. So that's what you're looking at right now. Now we have to see what happens tomorrow. We have some key levels to go over on the S&P in a moment here. We need to talk about the New York Stock Exchange high-low index and what that ratio is actually telling us. We're getting the same signal on the smart money, dumb money that we got in late February, and we're going to address that as well. We need to discuss why the Nasdaq looks better than the S&P, but we're starting to see some underpinnings here that are showing weakness. Talk about earnings. Coin's up $4. DraftKings is breaking out. Apple's up about $4. So let's get into it. Okay guys, let's start here, and we're going to start with the banking sector. Make sure that you subscribe to this channel and click all notifications. Also, the newsletter has been completely revamped, link in description. Make sure that you get it. Comes out daily. It's going to be extremely timely. Finally updated it, and now that I finally am over COVID, I'm able to focus on it again. So we're going to hit it hard and get really focused here. Now, if you see these levels on WAL, and we watch this bounce on earnings, decent earnings. Then last night, by the way, we're going to come out and say things are fine. Let's clean all this up and we're going to start over with it, right? The problem that you had today was twofold. And this was something that we actually shorted in the Alpha Chasers community and did exceptionally well with. So the first thing that you have to note is that these levels, they're all holding. So the level for me was right here. It was this low right around here. It was 26.90. Drop that down so you can see why it's there. There we go. So I've got the inability for me to close below that level. Bonk, 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 bonk. So you can all see why, right? So all I'm doing today is waiting for it to rally up to that level, and that's exactly what we did. And we're going to talk about what happened with this today and why this is significant. So at the end of the day, we wound up rallying directly to that level and then just absolutely collapsed. And it was just a very simple trade right from the get-go. All we were doing was watching our level. We watched the rejections that happened early in the morning. I'll zoom in on this. And you can see them right here, right? You're getting a gravestone doji right here. Then you're getting this hammer shooting star straight down. It was just a perfect short. And all you're doing is using this and then just the high right here of the stop. I'm going to do a video on probably Sunday on this chart because of your this trade, because of your comments about seeing videos on trades. So we're watching a trade down, and you know what there was for us to do? Absolutely nothing. And I'll explain why there was a reason for us to do nothing. When we look at this on the hourly chart and we just zoom in from the break, there's nothing here. All I have is this little level here. So if we're going to fail here and support becomes what? Rejection. We always like to point this out. Support levels, right, become rejection levels and vice versa. And you can see that very clearly here. So that let us know that, hey, that we just rejected. So we're just getting started. And once we saw that, that gave us the confidence to stay in the trade. Now, let's just be blunt. Not every trade that you're short or have puts on, I both, is going to work like this. Actually, I had way more puts on than anything else on this today. I was able to get very little stock off. I'm able to get stock off generally on one of my servers or one of my trading platforms, but they are being extremely stingy on the front with regionals, very stingy. So I got actually very little stock off, and the majority of the trade was just in options. Now, traded down, and then once this happened and we gapped down, what I was waiting for was mid-teens. I just wanted some kind of waterfall, watershed event, and I got it, right? And we got it right here. But it only lasted for a moment from this open. So that's actually turned out to be a good thing because then we were able to close it here. So I closed and exited the entire position right here. This is when the news hit that they were actually looking at selling the company. It turns out that that is not the case. that may have been a rumor started by short sellers. Personally, I have a hard time believing that, and I think something internally leaked in their company. I'm going to tell you why I have a hard time believing that. Look at the action in the stock. The stock did not rebound substantially. The stock could not even get back to the open. So I'm thinking that somebody leaks something. Now, I have no way of knowing that, but we'll find out in about a month whether or not if they're still in the same form. This is Western Alliance. To me, they have the most risk. If you take a look at their percentage out there of deposits over the line after PACW, and California has a real problem with the San Francisco Fed and their just inability apparently to do anything. So when we see how this plays out, we see this break test, support becomes what? We say it all the time because I'm trying to hammer it home, right? Resistance, support, resistance. Once you start to see these, it gets a lot easier. Life gets a lot easier trading when you start to see your support and resistance lines. So this is great. Now what? I'm just going to be master of the obvious here and state that KRE closed at a new multi-year low. So we're not rallying here at all. You're not seeing any kind of rally whatsoever. A matter of fact, what you're seeing is this really low, tight flag down here, right? Which is pretty rare, but there it is. It's a low, tight flag versus what people are used to with that high, tight flag. And then you broke on the weekly, and that's it. Now, for me, the troubling thing about this, when I really look at it, I say, okay, well, where could we get to? Well, if you start breaking in here, you can get back down to these pandemic levels. I mean, that is possible. You still have somewhat of an overweight in regionals, in institutions, compared to where they were back here. And the situation for regionals is significantly worse. So this can still unwind. You know, the goal was to get this behind us with FRC, but when PACW went down yesterday, we went over that in great detail. That changed the game. And, you know, I can't stress this enough to people. You need to have your head on a swivel. And I'm going to talk about this. Now, this is the only index when I posted this that was going to close below the 5, meaning the 5 SMA. Now, that's not the case anymore, but I just want to point this out. So here's my trading range. Well, I'm forming an H. So 15.9% of this index is regional banks in one form or another. I'm forming an H. Okay, so a test of 162 seems realistic. So we're going to have to watch this. If you're interested in playing that, you might want to watch TZA. TZA is a really great way of playing this. Probably don't want to even look at the weekly chart. Probably should better off just go into that right to that daily. You can see what we're talking about here, and you can start seeing how it's turning. If you use my relative volume line, all these clouds are different levels of relative volume. When my volume changes colors like this, it's above all my criteria. It makes my life very, very easy. And you can see here, what do you have? Buying. What did you get? A dragonfly. We got a little dragonfly right there, right? It's not perfect, but it's a dragonfly. We'll take it. Right to the line and held. What happens when you break 170? This is setting up. To me, this is a cup, and there's a little wonky handle in there. It's broken, but it's there. And then you have this major line that you're trying dearly to hold on to. I'm not so sure that we're going to hold that line. I'm just going to say it. I don't know that we're going to hold it. And I think this is something that we really have to pay attention to. 200 is starting to curl up, and we are above the 200-day moving average. I want to reiterate my point from yesterday so that people get this. Okay, when the Fed chairman comes out and tells you that the banking system is sound and safe, and you lose another bank in 90 minutes, not 90 days, not 90 hours, 90 minutes. Okay, they literally waited to see what the Fed was going to do and then realized that they were screwed. There's no other way to explain it. They waited for the Fed. They raised rates and said, we have a problem. Okay, that's exactly what they did. It's very, very obvious. 90 minutes later, this happens. The amount of credibility of the Fed is just shot at this point. And the issue that you're having is that no one's going to believe what they have to say. Now, if they're not going to believe what they have to say, then we're going to start watching things like KRE continue to deteriorate. If you start looking at KBE and what's going on there, we're starting to wonder exactly how bad this is going to be. And what are we seeing from that? Well, now we're starting to watch the big guys come in. Okay, even though they crushed, even though they had good earnings, we're starting to watch the big guys come in. We're starting to see JP Morgan. Now, maybe JP Morgan can hold this line. Maybe this was a flush. You know, they're looking for stops, flush everybody out, come out with the hammer, and then hold the ground. That's a possibility, sure. That could definitely happen. Take a look at Goldman. We're in free fall. We had a real nice trade on earnings on this. We actually got all the way up and we're up $20 on it at one point, but now we closed it when it was at 339, up 10, and now you have this, you're gapping down. Well, now you're gapping down. If forget these levels and forget that you're below the 200-day moving average. Just look at this. I mean, this kind of stuff, I could even use this one. This kind of stuff is just glaring, right? You can see rising wedge, and how they're ending. And they're getting worse. They're not getting better. So that's kind of telling us, and I have leaps on this, but it's kind of telling us that maybe we see a retest of that 300 level. Maybe that's possible. Now, there's some signs of weakness that we're seeing, and we're going to address that right now in the Nasdaq. And I just want to point this out. The Nasdaq looks better right now, okay? After hours, I've got some really good earnings. I think that's really important that we have very good earnings. It's very hard for the market to continue to drop. I do want to point out and be Captain Obvious once again. You're not breaking that bar that broke out. Okay, so this was the GDP number. We went through the Fed. We did all of that, and you're still unable to break there. So that's what we want to see. Okay, we want to see that. Now, we're all aware of this level and our inability to get over it, right? We're all aware of it. Let's put it up here at the top as well as that open and close so that we can see this range pretty clearly and how this is just a battleground up here. So that's an area that we have to watch. That said, if you start looking at other key areas, you're not breaking. You started to break, test, broke, flips, goes, comes back down. So now what we have to do is see if we're going to hold in here or not. I do have some concerns. The SOXX looked like it was going to be a great trade. A lot of people were looking at this trade only to reverse, and that's what you're doing. Now, maybe this is going to hold, maybe it's not. We had some really interesting news on the sector today, and we're going to get to the sector in a moment. But AMD is getting into the game, heavily getting into the game with Microsoft for chip design in AI, and they are working with Microsoft. Well, this is an enormous, huge development that was not really talked about, and this partnership or collaboration, however they're defining it, was not really talked about, but it's substantive. And it's actually really bad for NVIDIA because this means that they're going to have competition now. So if you see how this is shaping up and we tried to get through, you still couldn't get through. You still couldn't close over. And I think that's somewhat telling. It looked to me like we were going to build and this was going to continue to push. But now you have Wick City and we're going to have to see how this trades itself out. The other thing that we must focus on with AMD and NVIDIA are just how are they holding up? We're kind of holding up in here, right? We're trying to hold up in here. Today, it actually looked like this was going to be the group that was going to rally. I actually, off the open, at one point today, tried to put a short on right here when we broke, and it just didn't work, reversed. And obviously, the best spot for that short today, in hindsight's always a beautiful thing, but the best spot was that close, and we just use that close right there. All we did was gap fill, and then you can see that gap fill level over and over today. Always look at where your previous day close was. It usually leaves clues. You can see the clues right here. Here's some more clues, right? So we can all see that and how that is a level to watch and to mark off so that if it gets up there, you're aware of it. And then you can see how it acts and you can see how it acted there. Now that's just so coincidence that that's when the news hit, right when it got back to the gap fill. But this is not great news for NVIDIA. So what does that mean? Well, it means a couple things. SMH is overweight NVIDIA. Let's blow this up and we'll pull this here. And I want to show this and change this to 100. We're going to change this out to a 5 and we're going to make it an SMA and we're going to dig into this. So here's SMH. Here's my trend line that we're holding. We're now below the 5. We flipped it. We're now below it and we're sitting right on it. The nice thing about this is you have a doji. So if you break that doji, well, life gets pretty interesting, I think, for semiconductors. And at the same time, that tells us to stay out of the way. So should we be looking at something like SOXX? I think we might want to be looking at something like SOXX. Okay, I would not rule this out right now. And I'm going to get into a couple more things that I'm seeing as to why I'm suggesting this. But if we take a look at this and we go out there, let me drop this in and show you this. This is SOXX on a 15-minute chart. The line, the red line is the 5 or is the 8, yellow is the 5, green is the 3. They're all SMAs. Now, for the daily chart, I'm just showing you what they look like on a 15-minute. Now, my pattern is I want to be above the red down here, right? And then I want to be 3 and 5 above, and I want them all rocking and rolling exactly like this. That is usually the easiest way for me to note a change in trend right here. And you can see from that level, if you're buying that trend, right, you did well until you started to reverse that trend, right? So it wouldn't have been the worst trade in the world. It would have been about $3, $4 there. What's happening now? Well, it's pretty clear what's happening, right? You're starting to turn. You're above the 5, you're above the 3, you're above the 8. Okay? These are all leaning higher. And that's something that we need to watch. We broke out, we retested, and we're breaking out again. I would not rule this out, and I would keep my head on a swivel tomorrow. My one concern for the market, let me show you this, and then we'll go from there. But my one concern for the market is I can't get through this set 170. Now, Apple had really good earnings. They beat. Services were down, but iPhone sales were up. Accessory sales were up, but we cannot get through that 170. Now, we tried I think we tried 4 times tonight. Hold on one second, I'll tell you. I think it was four times, and we couldn't do it. Couldn't get through. Look, here's your initial. Here's your second attempt to get up there. 2. Well, that's a pain. 1, 2, 3, 4. Okay, so here we are 4 times, and we can't do it. We can't get above it. That's a problem. So if you take nothing else from this, watch the 170 level tomorrow. It's very, very important. 170 on Apple. Now, Coin had a really good quarter. Starting to see that hold that 50 level up about $3 after hours. See how the conference call goes, and we'll go from there. At the time of recording this, I had not listened to the conference call. If we take a look at DraftKings, well, we can see this pretty clearly. You're just exploding to the upside. Really good quarter. Couldn't really find a flaw with it, and I did look. Now, we refer to this as institutions and retail. And the reason is because retail has been kicking institutions, but for a little bit. I see an issue, and I want to address the issue. Last time that we troughed here, and we come up from that, right? You just come straight up, you're going to come in around. If you trough from here, again, you're going to come in somewhere right around here. Now, the problem that I'm having with this is the following. If we blow this up, and we look at these spreads, when we have these spreads, we usually peak. We still have the spread. It's getting tighter. The other thing that I'm noticing, when smart money is fully invested, we've been hitting bottom. When smart money is completely underinvested in regards to retail, we're hitting highs. We need to see this push higher. We need to see smart money get more involved here. This is one thing that is leading me to think that we might have either some sideways action or some more downside risk. And I'll show you something else in a minute here. Now, in front of us is the New York Stock Exchange high-low ratio. And we're looking out a year, 3 years here actually. So let's go look at a year. And you can see how we are under this level now. What I want to point out is this is when we are maybe a little too frothy, and this is when we are a little bit too pessimistic, meaning the high-low ratio is skewed. I'll tell you why I think this is important for a couple of reasons. Number one, you can see 313 and what happened with the S&P when we were down here. You're never going to get lower than a 0 on this ratio. It's just not feasible, right? But if we take a look at this level and we drill into that level, that's pretty low. So this leads me to believe that, yeah, can we drop? Can we go lower? We can, but maybe we're more towards the tail end of this because of the breadth. The breadth can only get so bad, and then it's got to rebound. And when it does usually rebound, you start seeing the indexes push higher. So this is a bright spot. It's cloudy because it's not showing us any signs that it's over yet, right? So if we continue to drop, the market will continue to drop. We needed to make a U-turn, but we're in that range that any time that you bought down here and you were looking at a couple months, well, you did okay if you just simply used this as a trigger. If you just simply bought here and sold here repeatedly, you did okay, right? If the day that it broke versus the day that it touched, you're not getting killed doing that, right? You have to go back to this one and then look here. Same thing. You're not getting killed. So when you start seeing things like that, you want to pay attention to it. Now, this has been happening all week, and I need to watch it, and I'm not crazy that's been happening. We got right over the resistance line, and we rejected. That's not what I want to see. Now I have a gap down in the chart, okay? I want to be real clear about this. I don't like island reversals. Why? Island reversals are high probability trades. Okay, so special island reversals. Not just island continuations, but the reversals are huge continuations. I'll give you a great example of this. So let's take off this level right here. Get rid of this M&A, right? We'll get rid of that. Okay, we're going to get rid of this for a moment, and then we're going to zoom in here. You have some breaks. You have a huge gap here, right? And then you get a gap here, okay? No follow through, but another gap here. Well, this is an island reversal gap. It's a bullish one. That's what that is, right? So we're going to clean off my little levels, and I'm going to mark this off, right, from here. Let's do it this way. It'll be cleaner. Now, there's my island reversal gap. That's giving me a heck of a time tonight, isn't it? Okay, so we can see that level in there really clearly, right? Now, and we can see the gap here. We can actually move this over more. Now, what just happened up here? Okay, this is what starts to bother me. Now I've got this gap, and if I have a follow-through day tomorrow, then I've got confirmation of it. And most likely, when you have a bar like this where the high is the top, right? The high is the open and the low is the close. You need to pay attention to that. So this was our leading sector. You might say, well, maybe other names are leading that sector. Okay, well, let's go through those names. Let's take a look at Meta, and let's look at Meta. Meta rolled. Here's your 5 SMA, and you're rolling. Okay, so once you start rolling like that, you don't want to see that. Okay, now you're making lower lows, and you're hanging on by your fingernail. You start looking at your RSI. RSI over 70 is not a problem. Overbought can stay overbought forever. The problem starts coming when you start seeing stuff like this. This is when the issue becomes an issue. When you start having divergences like this, you want to pay attention to those divergences, okay? You want to pay attention to those. So now we have these moves, and we need to pay attention to them, right? All right, the other issue is right here. See how you're breaking that line? One of the very first videos I did when I started this channel was an RSI video. And I pointed out exactly when this is just an outright sell signal. And when you break through 70, after you've been up here, it's usually a sell signal. Now, it doesn't always work, but here you are. Okay, and it's really right here is where you broke. Now you look at it and go, well, this is where you broke. If we came up from that level, all right, well, that puts us right around here. And then you kind of look at that level and go, well, did that really matter? And let's just say that, yeah, let's take a look and say, yeah, well, 177, and then we came down to 169. Now, you could say it mattered, or you could just say that it just showed that we were going to drop 10 points and had underperformance. But you don't know that when it's happening. So we're seeing this with Meta. Microsoft is starting to have a hard time closing above its 5-day moving average. The RSI is over and looks like it's about to break. Google is below its 5, and you're watching the RSI start to roll. See how it's rolling? Everyone can see that that is pretty much a negative divergence there as well. NVIDIA is below, and you broke on NVIDIA back here, tried to go higher. Now we can all see this again, and I was hoping that it would remedy itself, but it did not remedy itself. We can see that line very clearly here, and we can see this negative divergence here. These divergences can take weeks or months, but they will come home to roost. And now you're below the 5. You've got this doji, and you're at a lower low. Is that something you really want to be getting involved with, right? And I think that that's becoming the issue. Now, if the market was going up because 5 or 6 stocks were going up, even though it was a lot more stocks than that were going up, if they pull back, the chances of the market pulling back are pretty good, right? Yes and no. We could also rotate. And I'm wondering if we're just going to start doing that. And that would mean, and this is where I'm going with it, right? I'm not so sure that we're just going to collapse. I'm not sure of that at all. And I don't know that because I don't know what's going to happen. Nobody knows what's going to happen. But I'm not seeing signs of massive pressure here. I'm not getting long red bars. I'm getting doji, signs of absolute confusion on what to do here. That is very different. If you look in this range, we went over this before in yesterday's video, how short this range has been over this period of time. So what could happen? Well, Spotify is a great example, right? Spotify had earnings, came back, gap filled, and now it's setting up to go. We actually own this in the Alpha Chasers community and doing, well, we're up a little bit in it finally, but we bought it this day, get gap filled, and it is what it is. But are we going to rotate into different names? Okay, Race. Okay, they had a really good earnings report. It's a name that I'm in. Okay, it's at all-time highs today. So you are seeing some new leaders emerge. That's really hard to get the market down if we start getting new leaders. And I want to make that really clear. If we start getting new leaders, it makes it very hard for the market to go down. Now, I don't know what those new leaders are going to be, but I'm starting to see signs of this. Starting to see names like Shop shape up. Maybe this is going to be the leader. We just don't know where the money's going to go. We don't know yet. But we are seeing some earnings and we are seeing signs of this. So I would tell you that overall, we need to see what happens with the regional banks. And I'm going to just say this, and I went over this yesterday. I'm going to go over it again. So we're seeing this up $3 after hour. So Icon came out and said, by the way, I'm still going to issue the $2 dividend on schedule, but I'm postponing the conference call or the earnings call because he wants to go over the short report. So you're up $3 tomorrow. So everybody that's short this right now has to come in and say, do they really want to stay short when they're going to have to start paying $2 a quarter to stay in the short? Meaning it's going to cost them $8 a year to stay in that short. Does that seem like something that people are going to want to stay in? And my answer to that is no. The other thing that I would say that you should be paying attention to, and you're talking to somebody that's actually long the stock, but the other thing that I would be paying attention to is you have an RSI of 4, okay? That's absolutely insane. So now you have this doji. If you flip the doji, you can get up to here really, really quickly, guys. Really quickly. Let me click off of this and show you what I mean. You can get right up here if you flip this doji. There's nothing but air. Very easy move to get back to 39 and a quarter. Keep that in mind. Comment on this video if you found it helpful. Please share this video. I think it's really important for people to understand what's actually going on out there right now. Have a good night, everybody.